There are 80 new insider trades that were filed, and we look through them all to find those handful that'll be high signal and help us outperform. So we actually taking a look at our charts, we're actually seeing a pretty nice step up here in the percent of insider trades that are buys, and obviously the overall number of buys. So that is nice to see. And we'll go, when we do take a look at the insider trades, we will see there are quite a few more interesting insider purchases today than we've seen over the last few days, which is nice to see. Obviously not going to help us out on the longer time frame. We still got a long ways to go before we catch up to where you'd like to be in terms of the percent of trades that are buys, but nothing to worry about too much. Particularly interesting to see such large insider buying when we're also seeing all those high momentum stocks really start to break down right now. And a lot of those stocks were stocks that we saw a ton of insider selling at in CEO Watcher and in these videos, which we can actually, let's go take a look at some of them, because I think it's a good example of how insider trading can be used, especially on the sell side. So if we look at, let's take a look at, I guess, any of the quantum stocks that are all breaking down. I mean, all of these saw quite a bit of insider selling over the last few months, obviously. And here's the main thing to notice, which we'll look through all of these. This selling happened, quite a bit early during the summer, and then they got another leg up here. If we go look at like whatever this one is, quantum computing, we can see again some selling in the summer, and then another, and then here in the fall another leg up there. What other ones are there? Rigetti would be another one. Again, we saw a bunch of insider selling over the summer start to pick up. So you can see that this insider selling is the thing to notice about a lot of these, and you'll notice it even more if we go look at something like Affirm. This is one where you'll remember we found the CEO here starting a 10b5-1 plan for the first time ever. So this is obviously a much higher signal when his first sales ever are starting right here up at the very, very top. What are some other good ones? Oh yeah, so we can look at like Oklo or any of those energy ones where again, it's a similar situation to Affirm, that the two co-CEOs or whatever they call themselves, let's see, co-founder and COO, and then this guy's a co-founder and CEO. They made their here's their other two sales back in July. So they made their first ever sales. And the thing you'll notice is that the stocks continue to go up quite a bit. And if you zoom out a little bit more, obviously the momentum of this company is up 600% in the last year, basically. But when insiders are selling, it's not often, especially at these high momentum stocks, I guess let's pay attention to those mostly. When they're selling the stocks, they're very clearly telling you like, hey, we think this stock's getting a little ahead of ourselves. This is literally a price we are willing to give up some of our shares for, which obviously if they truly believe, especially a lot of these companies that mention like how big their companies are going to be in the near future, and then you start to see them selling shares like way below what they say the company is going to be worth eventually, should start to ring alarm bells. It doesn't mean that you have to be selling right then, or that it's a great sell signal or a great short signal right then. And oftentimes I will own some of these stocks that I see selling at, but it's just, it's cluing you into the fact that we're probably getting closer to the end of the run-up than we are to the beginning, and to just start to pay attention to the price action, which then becomes, especially in these momentum stocks, price action really becomes to be one of those main things to pay attention to, because momentum tends, on average, right, momentum continues. It's both a principle in physics and then also in the market is something they found as well. Momentum tends to continue. And so if you are trying to short into like high momentum in any of these where the stock is clearly just going up and to the right, and you're trying to short, you're just going to get your face ripped off, even though there is insider selling, by the momentum. So it's just telling you, hey, start to be aware that when things do start to roll over, it might be worth either taking a stab on the short side if you do want to short something, or might be worth starting to look into selling the stock. It doesn't mean sell right now. Figure out what you think a breakdown of the stock will be, which companies like Oklo, obviously, that are on such an absolute tear, the breakdowns might need to be pretty big. So you could use whatever you want, right? Some people use like a 200 day. You might still be holding the stock and you might wait for it to get all the way down here before you are interested, before you think that you want to sell, which if you're a really long-term holder, the 200 day tends to be the most used chart. If you're a little bit more of a short-term trader, you might use something a little shorter. You might just kind of make up your own sort of, say, which I guess like in this case, the 50 day would be following in. You might be like, okay, well, let's see if it bounces. It seems like it bounces off here quite a few times, and kind of hovers, bounced off twice right here. So let's see what happens when it gets to the 50 day. If it then breaks down below that, then you might say, okay, now I want to get out of the stock. Now I want to try to short the stock, whatever it might be. But it's just using those insider trades at some point. I mean, at some point, all of these quantum companies are going to go down like 80%. A lot of these power companies are going to go way, way down. They got way, way ahead of themselves. And the insiders are telling you that. It's just kind of up to you to sort of figure out when that might be, because it's not as easy, unfortunately, it's not as easy as just like, hey, insider made a sale. That's kind of interesting. They sold their stock for the first time. It's time to get out and go short. It doesn't work quite like that, especially at the high momentum stocks, because you still have to pay attention to like catalysts. Generally speaking, the insider trading is not the catalyst that is going to cause things to turn around. You need to wait for fundamentals to break down or price action to break down or for some sort of catalyst to come along that'll cause the stock to turn things around. So putting that data point, you just note it. When you see some insider selling, you just take a note. Okay, things might be getting a little, it's worth paying closer attention here to start to see when things break down because the stock, the insiders are getting out, meaning they think the stock price is kind of getting ahead of itself. And so I need to pay closer attention. And kind of the same on the buy side, even with an insider buying, even if if you think there's a strong chance that the stock turns around, the insider buy doesn't necessarily mark, often doesn't mark the exact moment the stock is going to turn around. Something has to happen, whether it's positive earnings reports coming out, whether it's a positive news, a positive press release, like something has to actually happen outside of the insider trading to kind of start to get things to turn around. And so that's what so you can't just solely rely on it. It's just another signal, another thing to use there. So let's now just go take a look at today's top insider trades, which I guess just in transparency, I do now actually because of those breakdowns and a lot of those as of yesterday, I do have a couple days ago, Monday, I have a short position, either direct, like actually short or via puts or via, inverse stocks on most of those companies that we just looked at with pretty tight, stops. If things do start to turn around, if price action again starts to turn around and starts to tell us that, hey, maybe this, or, Trump announces some deal with China and the market turns things right back around, I want to obviously get out of that as fast as possible. But at some point, I'm pretty confident those stocks are all going to have a pretty big drawdown. And so, just taking a little bite right now, which obviously has been working pretty well so far this week, but we'll see. Anything can happen. So it's taking a look here. We start off right at the top here with Stephen Angel, 1,700% increase, buying $2 million of the stock at CSX Corporation. If we go into CSX Corporation here and let's just take a look, we see nobody else buying the stock. Bunch of selling really historically. So pretty interesting to see an insider buying for the first time. If we do, or for the first time in a while at least, if we go look at the filing itself, we see that there's nothing notable here. It's just a normal insider trade. If we then go look, what is next? If we then go look at Stephen Angel himself, we can see he's made a handful of purchases before, all during COVID. So those returns are obviously going to be very, very good, which they are, 60% one-year returns. It makes the signal a little fuzzier when all of his purchases are just during COVID there, but he did obviously time those purchases well before. So overall, we've got a first-time purchase at CSX, at least a first-time purchase in quite a while at the company, a first-time purchase for this CEO at that company, a good track record, overall a pretty high signal insider trade. And then it gets even more interesting when we come in and we dive into what is going on at the company themselves. And what we are looking for is the CEO change, because this new CEO that we just saw, I mean, this news literally just came out earlier this week. Well, I think this guy actually got fired a couple weeks ago, kind of at the end of September. But basically, the board ousted executive Joe Heinrichs last month following disputes over his compensation and, more importantly, his response to a potential merger proposal from Union Pacific. According to the report, Union Pacific proposed a merger with Heinrichs, but he failed to pursue the deal, and then Union Pacific struck a deal with a competitor. After that rival merger was announced, the CX board got mad that he basically didn't pursue it. Related to that, we then see Ancora, who's a large shareholder, who basically saying, we applaud the board for heeding shareholder feedback and terminating former CEO Joe Heinrichs. They're basically mad that he is a value-destructive tenure. He wasn't embracing the need for transcontinental service in the United States. He wasn't being aggressive enough on the growth front, and he botched the opportunity, and if anything, appeared to try to fight the tailwinds of consolidation. And so one thing you'll notice when you read through this is that Ancora is really hoping for a merger for CSX here. So, and they mentioned the transcontinental stuff, blah, 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 but what is more interesting is they'd say, although Steve Angel is not a railroader by trade, his M&A pedigree and value creation record indicate his appointment is an initial step in the right direction. We expect him to be far more proactive when it comes to pursuing opportunities to increase shareholder value and identifying a willing partner to merge with. So very, very clearly that they are hoping for more M&A, more growth, more aggressive growth, especially around this transcontinental railroad. And they definitely want some sort of merger to happen here, which obviously would be a benefit for CSX Corporation, or most likely would be at a premium to the price. So overall, you can go read through the transcript and stuff, but he's so new here, it's kind of hard to, I don't know if there's a ton of info to gather through that right now, because he's literally been at the company for like 2 weeks, 3 weeks or something like that. So obviously a huge company, $67 billion. This is a railroad company, which I don't know if I mentioned, but a railroad company, $67 billion. Obviously the stock's not going to shoot up 100% or anything crazy, in the near future, but I do think it's a pretty interesting story. It added a little diversification to your portfolio if you're interested in. I'm sure, most of us don't own any railroad companies. It does pay a 1.4% dividend, dividend. But the whole kind of argument here and why it'd be interesting to hold this company is just that they have a very, very clear interest in trying to get some sort of like merger deal done, or at the very least some growth via M&A, but they really want some sort of merger done and some sort of consolidation going on, which would help either get them, you know, some sort of pop, hopefully 10, 20%, whatever it might be in the share price when a merger does happen, or they'd be able to just get some growth via M&A. So, you know, this isn't probably most likely not going to be like a huge 100% return in the next year or two or anything like that, but you know, you might be able to collect a small dividend and, you know, a potential merger or acquisition in the future that could get you a little pop as well. Makes this, basically this is a what I would call like a bet on the jockey type of situation. You're just betting on this new CEO coming in. He's got a track record of success. He's putting $2 million of his money where his mouth is, and he clearly has a mandate to try to go get some sort of merger done. So overall, I think that's a pretty interesting story. Moving on, we've already looked at Cullinan Therapeutics a couple times. We've got a 10% owner here buying the stock. The 10% owner has terrible track record of return. So because of that, we tend to just ignore 10% owners are already a little lower on average, historically speaking, have been a little lower signal than directors or executives. And then when they have such a terrible track record, I tend to just kind of ignore them. Similar story here at Denny's Corporation. Only so many hours in the day that you can look through stuff. So, you know, when you have negative 50% returns and you're a 10% owner, I tend to move on. Saba Capital, we've looked at 100 times before, continuing to buy ASA Gold and precious metals, though gold is now, you know, falling off a cliff here, which this is another example, I guess, on the other side of a momentum stock. When they were buying the stock back here at like $34, the stock was already up. Let's see if we can get here. The stock was already up, you know, 70% or something in the year. So clearly a momentum buy, and then you see them continuing to buy, and so you say, okay, I'm gonna buy as well. And in this case, they did kind of nail the time. The stock went down a little bit when they first bought, but they did kind of nail the timing. But what you then have to pay attention to is just once that this is like, it's a pure momentum play, right? It's the stock is going up, and I think it's going to continue to go up. There's no like great fundamentals here. It's just ASA Gold and precious metal is essentially going to track gold returns, except at leverage. You know, it's going to be higher. It's going to go up more or go down more than gold will. So basically a pure momentum play. And in that case, you're just like, well, I'll get out when momentum breaks down. And so for me, you know, I was in somewhere around here and then got out. I mean, I obviously didn't nail the top. I sold a few days ago. I don't remember what the price was exactly, but you know, I was able to ride it from, let's say, 35 up to 45 or so, 44 or so, and then get out, and you know, it worked pretty well. But you just have to know the type of trade. It's similar to kind of what we talked about with all that insider selling. Don't fight the momentum, and when the price action starts to go against you, like, know what kind of trade you're placing, and then when the price action starts to go against you, that's when you can then take what you've seen from the insider buying or selling, and then if the price action changes on you, you can say, okay, maybe now it's time for me to get out, place a short, buy more stock, whatever it might be. But you've got to marry the insider trading with, you know, the fundamentals or the price action, kind of depending on which type of trade you want to make. So for something like CSX Corp, we don't care so much about the price action actually. This is more of just a bet on like on a catalyst of a merger happening at some point in the next couple of years. So you don't care so much about perfectly timing that purchase, because you wouldn't want to miss that catalyst that's coming just because you're trying to like perfectly time when the purchase comes in. So you have you're paying attention to a different thing, and in that case you don't care so much about the price action when you're just paying attention to something like a short, or when you're paying attention to a momentum play. You need to pay a lot more attention to the price action there, because that'll kind of help tell you when to start the trade, when to get out, when the trade might be working in your favor or when it isn't. So looking at Pinnacle Financial, we can take a look here. This one is another pretty interesting situation. So you can see we've got a big dip here. So the things that are going in our favor, well, let's first look at the things not going in our favor here. Is this guy's track record is also terrible. So we just passed on these two 10% owners because they had a terrible track record. In this case, another terrible track record. The difference being, one, this is a director, so just on average, directors are higher signal than 10% owners. So that immediately makes it more interesting. But the other reasons is, one, we got a dip buy as well, which is another point. You know, dip buys, big dip buys specifically, tend to be the highest signal type of insider trade. So we've got the stock coming from 118 all the way down to 86, which is, what would that be? About a 27% dip. And then we've got the group buying here, where we've got like the CFO down here buying the stock, as well as a bunch of other directors here buying the stock as well. So, and they're all buying at around this same kind of $90-ish dollar amount. So group buying plus a dip buy makes it a little more interesting than it would have been if it was just this guy buying, because obviously he doesn't have good return. So that does take it down a notch. So overall, I'd rate this as kind of like a moderate to moderately high insider trading signal because of the dip buy and the group buying. And then if we go take a look, though, we can get a very clear picture here. Pinnacle Financial, we can figure out exactly what's going on. So we can see here, boom, obviously this big gap gap down. Now, why did it gap down will be the news that we want to see. Pinnacle Financial, Synovus to merge in an $8.6 billion all-stock deal. The post-merger, the companies will have Pinnacle shareholders will own 51%, and then Synovus will own 48%. So, you know, it's an all-stock deal too, they mentioned. So it's almost a merger of equals. You know, Pinnacle's slightly, just a tiny bit bigger, but you'll notice an $8.6 billion all-stock deal. So when they say $8.6 billion, that would be the company being acquired. In this case is Synovus, which again is supposed to be slightly smaller than Pinnacle Financial. But you'll notice here, Pinnacle Financial, the one that's supposed to be bigger, only a $6.78 billion valuation versus the 8.6, which means Synovus should be even lower than that. So obviously the investors do not like this deal at all because both stocks are down. Pinnacle's down like 25% or so. Synovus is down about 20% because the Synovus shareholders were hoping to get bought by a much bigger company that would, you know, give them a nice premium. And then apparently investors don't believe that this deal is going to merge as well as what the executives believe it will, which they mention here in this M&A call. I think they'll tell us about basically what they expect. You know, here's all the details of the deal. But what they're expecting here is tangible book value earned back estimated at 2.5 to 2.6 years, which kind of depending on who you ask, you know, some people say the average is about 3 years, so this is a little faster. Some people are like, this isn't really all that fast. But the more interesting thing is that the deal is expected to deliver 21% EPS accretion by 2027. So this whole thing here, this whole bet, and it's somewhere, it tells us when it's going to close, Q1 2026. So the whole bet here is just on this going well, and basically this actually coming to fruition. A 21% EPS accretion by 2027, you know, with them earning back all their money by, you know, basically the end of that year, or the end of 2028, I guess, would be the hope now over the next 2.5 years, essentially, that the stock is going to both get EPS growth, but then the other thing you'd want is that because it's down, because the stock is down 20% now, it's trading at a very low, you know, normally you'd use price to book probably for a bank, but I'm going to use PE ratio just because it aligns better with what we just saw about what they say the EPS hiccups. Again, the EPS accretion will be. So in this case, you can see obviously they were trading way up here, and then they announced the deal and it sunk them all the way down here now to at about a 9.4x PE ratio. So even if they don't get all the way back up to this 15x, if they're able just to get back up to 12.5x, just that alone will then get their price up to, well, what do they say? They're at 12.5x PE ratio, and then we can go next 12 months, we can take a look at what they're at. So 838 is their estimate. So let's say they get that, and then they get 12.5x. Just that would bring them up to 104.75. So 104.75, which is, you know, a 20%, 19% return from here. So they were trading at about a 15 here, but let's just say they get back to 12.5. That would bring them up to 104. But then now you remember they have that 21% EPS growth that they're hoping for. So now if they are able to then get their earnings up 21% as well, with the PE ratio staying at 12.5, then they would go from, you know, 104 to, then you have to increase the price again by another 21% because, you know, if you're maintaining the PE ratio and then the E goes up 21%, you also need the P to go up 21% as well. So that gets you back up to, you know, somewhere in the 125 range or whatever it might be, which is obviously a very nice 40% return here over the next couple of years, and a bank stock giving you a 1% dividend as well is pretty good. And that's not even to mention if they're able to get back up to you know, a 15x, that'll put them somewhere more up in the like 140, 150 range, which is getting you up into the 60, 70% returns over the next few years. So you have a very interesting setup here where, you know, with the price going down, but the EPS estimates actually going way up. And, you know, you then get the twin engines here of EPS growing and then the price per earnings also hopefully normalizing back up to 12.5x or, you know, even higher, hopefully. So if it all works out, it would work very well. The whole thing is, though, obviously investors don't think it's going to work out. They don't think this integration is going to go as well. They don't think, you know, this 21% EPS growth and by 2027 is really going to happen. Maybe don't think they're going to be able to pay it off as quickly as they say in the 2.5 years or, you know, for the tangible book value stuff. So that's kind of the whole question here. For me, this is a little too tricky of a situation. So management teams always believe, right, that they're going to be able to do M&A well, and that's just not the case. A lot of times management teams do not do M&A well, and when that happens, they end up having to write off the M&A or it does terrible things to the business. So that's the whole entire bet. So because of that, I actually discount this insider buying a little bit, just because, like, of course the insiders think that the M&A deal that they just agreed to is going to go well. Clearly the market disagrees. It'd be up to you to kind of do your own research and see which side you line up on, but it's a very clear story of what's going to happen, which does make it an interesting setup, but for me probably a little too hard of a situation situation, at least right now, for me to make a decision. I have to dive in quite a bit more, and I don't really know if I'm going to in this case. But if you're a more of a fundamental investor and you want to really start to dive into this stuff, I think this is a very interesting situation that, you know, has some similarities to some of the stuff you might have read in like Joel Greenblatt's book about, you know, special situations. And overall, that's why I think that's a pretty interesting setup. What else do we have here? This one, I believe, is another situation of like a 10% owner. Yeah, 10% owner with bad returns buying a ton of the stock. Just no, you know, there's no signal here. It doesn't look like. Now, MBX Biosciences, we've got two more we'll go through here real quick. MBX Biosciences, this one gets a little more interesting now. Yesterday, we would have looked at it as well because this director bought the stock down here, Stephen Hoerter, how you pronounce that. And you can obviously see, so they had good phase 2 trial results. Stock goes up 100%. Stock is now down 40% or whatever it is, 40% or so since that pop. And now you've got a couple insiders buying the dip down here. But this is, I guess, here's another good example of what exactly we're talking about, where when this first guy bought the dip, the stock was basically just been going straight down. The stock had basically just been going straight down. Let's get even closer here. Since this announcement, right? They got the pop on the trial data and then just like down. Now we are getting to a situation though where you see it start to turn around here a little bit. And so again, this is kind of all like, it's a little harder to use like moving averages when you get this big pop here, because it's kind of not the dislocation kind of throws off the moving average stuff, which you could try to use like EMAs or something else to try to fit it a little better, or just use your eyeballs and you can kind of get an idea of like when things are starting to turn around. But this is a case when I saw it yesterday with the director buying, there was no like clear story. Again, so this is what it comes down to. There's no clear story for catalysts coming up in the very near future that would be like, okay, I actually want to own the stock ahead of this very specific catalyst, because I think when that specific catalyst, whether it be new data readouts, earnings calls, some news that you think is going to come out, whatever it might be, I want to own the stock when that happens, because I think that catalyst is going to cause a big pop or drop. If you're on the short side, that's going to cause a big pop, and I want to own the stock before that pop. In this case, they don't have any, like, they just finished phase 2 trials. They do maybe a kind of a catalyst is when they get some approval by the FDA to have their phase 3 trials set up, might give them some sort of a catalyst. But then all like phase 3 results aren't going to happen, or phase 3 is not even going to happen till next year, so results won't be till the end of next year, or could even be later in following years. So when that's the case, and there's no like near-term catalyst where I can say I want to own the stock specifically for this catalyst, you then have to transition over and be like, okay, I want to use the price action as a little bit more of my guide, because you don't want to buy a stock that's just going down. There's no reason for a stock that's just going down like this. It's not just going to magically, I mean, at some point it will, but the chance of you properly timing it magically turning around for no specific reason is very unlikely, right? You could just end up, you don't know if you're here, you don't know if you're way down here, you don't really know where you're going to be at in the long term as more time passes. It's now a tiny bit more interesting because we saw that other insider buy kind of down here at the bottom, but now we had a pretty big up day after that. It was up 7% the day that guy, by the close of the day that guy bought. Now it's kind of flat, so maybe not as interesting, but this gives you a very clear setup of just like, okay, well, if momentum has actually turned around, where would I place my bet for where I now believe that I was wrong? If I'm betting that momentum is turning around and the stock price is going in the right direction, where would I place a bet for where I think that is an incorrect assumption? And you can kind of, you can do whatever you want. Most people would probably use moving average lines, but again, you get this big jump here, kind of throws that off. So you could just say, well, if it gets back down to this price somewhere around here, around like 1350 or whatever, if it gets back down here, then it was probably just a bit of a fake out, and the stock might, continue on its little downward trajectory here. So then you have a pretty easy, you can make a pretty easy bet of being like, okay, we've got a couple of insider buying. I think that is a positive sign in the mid to long, over the next, 3, 6 months, 12 months, whatever it might be. I think that's a positive sign. Now I'm just trying to figure out when I want to actually get in, because I don't really want to fight this momentum, because, who knows, it could fall all the way back down to here before things do finally turn around. So I'm confident at some point it's probably gonna turn around, because this insider buying is telling me that it is, but I'm not sure exactly when that's gonna be. So then now I need to use price action. I could be like, all right, maybe I put on a position here right at about $15, but I just say if it gets down to $13.50 again, if it gets down around this like $13.50 range, then I think that momentum is kind of broken down. What I thought was this turnaround in momentum has kind of broken down, and I'll get out there and just wait it out a little longer, see if there's more insider buying coming in, see if it tries to turn around again at some point, and then you can pretty easily size your position, because you're like, all right, it's at $15. I'm gonna put a stop down here at $13.50, so I'm betting $1.50 per share is kind of the risk I'm putting on. And if maybe I want to bet maybe I'm willing to risk $1,000 total, so then then I can buy, maybe I'm willing to bet, make it easier on myself, maybe I'm willing to bet $1,500 total, so then I can buy, you know, 100 shares. So 100, what am I trying to say, 1,000 shares, because you're betting $1.50. So yeah, you could buy 1,000 shares with $1.50 as kind of your risk, and then that would bet, you know, $1,500 total. And that's kind of how you'd size it here. But this is another case. Again, I think this got a little more interesting now because the stock price has, which you can see maybe a little easier on this chart. You can start to see the stock has actually started to turn around on the very short term here, and now we've got a couple insider buys coming in, especially this one being the president and CEO, who looks like he's only bought the stock once before, which didn't time super well, though I guess, you know, maybe he knew that this positive result was coming out later. So I don't know if I'd really put all that, I wouldn't rate this as a particularly high signal buy himself, but the 40% dip, again, you've got the 40% dip, which is a positive, and then you've got now a couple of insiders buying the stock as another positive, making this a moderately interesting insider trade. And then with price action turning up, you know, this would basically be a momentum bet here of just like, I think, you know, kind of like a turnaround, but a turnaround with no near-term catalyst kind of turns it into more of a price action momentum style play, just betting like, okay, I think these insiders are much more confident than the market is. I'm gonna join in with them on their confidence, and I'm either you can just put the trade on and just ignore everything and just say I'm gonna hold this for a year and, you know, leave and come back and maybe it'll work out. Or if you want to try to play it a little more like a trader, a little more intelligently, you would, like I mentioned, you could start your trade now and basically say, I think if it gets below 1350, then I was incorrect and the momentum has not turned around and I'll get out there. So that's another interesting one. And then the one to end on, which, I mean, just tons of interesting ones today, so we didn't get through a ton here, is we've got Thomas Bogan, a director here at CS Disco, who has suddenly turned on a 10b5-1 plan here. And again, look, another example of one where I would say, now these are scheduled obviously as part of a 10b5-1, but you see this director buying the stock for the first time, and he's buying he's just continuing to buy right around this like $6.20-ish mark. And so again, the stock didn't go up immediately, though in this case I probably actually would have, because of when he bought the first time. It was like somewhere right around here where the stock was actually going up quite a bit. So this would have been a case where you probably could have just picked, again, any, like, you know, pick the 20-day if you want, and you might have said, what you probably would have done is you probably would have bought right here because it's trading above it, has positive momentum, and then you would have had to sell out here when it broke below it. And now you're kind of watching it just sort of fight the momentum line. But, well, now here's one reason why, if you're not on the email list, you need to be on the email list, because I sent this out at market open. And if we take a look, the stock price opened down here at like 629. So the stock is up 9% since market open, which we found, you know, I sent the email this morning highlighting CS Disco before market open. It goes out at about 9 a.m. So before market open, and now the stock's already up 10% since then. So you should be on the email list, which you can get ceowatcher.com. Just put your email in there and it'll automatically sign you up to the list. But in this case, what we probably would have done is you would have bought here when you first saw him buying, because you're like, all right, positive momentum play, it's trading above momentum. That's what I'll, you know, it's trading above its momentum line. I'm going to buy and see how it goes. And then it would have broken down here, so you would have sold, and then now it would have jumped up again. And so you're like, okay, we've got this guy buying, and you've got the stock jumping up above the momentum line. Again, maybe I'll buy the stock right now as kind of a momentum play, and then I'll put my stop loss down here, you know, trailing just below where this 20-day is basically. And if it falls back down below the 20-day, I'll get out again. But what becomes even more interesting here is this one actually has a pretty good story overall. So in this case, while these were probably more momentum plays back here because you were kind of still a little ways away from earnings and just, you know, whatever, it was just this one insider buying the stock, maybe you would have made it as a momentum play. But in this case, it actually has there's a pretty interesting story here, and you've got earnings as a catalyst coming up here in the very near future, in which case, even if this hadn't hopped back above the 200 or the 20-day here, you might still actually want to treat this as more of a story, and you would still hold the stock because you're treating November 6th as the catalyst. And the reason why is if we look historically at some of the earnings here, the earnings per sales, you can see it's probably trading a little bit on the lower end, about 2x the next 12 months, which I believe if we were to go look at kind of like this industry that they're in, the average is going to be a little bit higher than that, 2.5, 3x, somewhere in that region, kind of depending on who you pick as their peers. So they're probably trading at a little bit of a lower valuation than their peers would be. Now, part of the reason would be because peers are growth is a little faster. So in this case, their growth is sitting around like 4% or so, 4.8%, which obviously they're going way faster before, and things slowed down quite a bit. But it's actually heading in the right direction because, which we'll go take a look at. So you can see 4% last year, which is also the same 4% for the last 12 months. But they're projecting their midpoint for this 2025's revenue is like 153 or so, which if you do 153 over about 144.8, they're going to come in more between like 5.5 5.5 to 6% growth, which is actually more in line with the industry. So the revenue growth is actually accelerating here while they're trading at a lower valuation. If the revenue growth continues in the right direction and continues accelerating, you now have a company growing as fast as peers, trading at a much lower EV sales multiple. Obviously, you'd want to look at like margins and stuff like that to maybe compare more apples to apples, but just at the surface, it looks like it's a company that's probably actually undervalued a little bit. And then you can go kind of read the transcripts, which basically the CEO essentially just says they'll tell you you can look at like revenues up 6% year over year. So you can already see actually at the top line here, even though quarterly they're up, I think 4% or whatever, they're growing 6% year over year, and then they're projecting 6% growth essentially for 2025, full year 2025 revenue, 148 to 158. So the midpoint, which they did just raise it a little bit, midpoint of 153. So if they come in at 153, they'll be at like 5.5% growth, which is obviously a step up from a pretty nice step up from the 4% growth they're at the year before, and then puts them more in line with the industry. So, and then you can kind of read through if you want to sort of talk about what is driving the growth. But this is a pretty easy story case where basically you would be saying the reason why in this case you have the specific catalyst of if revenue growth stays on track, they're likely to have a pretty good earnings outcome, and that could be a catalyst for why the stock would re-rate, in which case you're more or less betting on a specific catalyst breaking the price action. So you'd say, I'm going to ignore sort of this price action and momentum because I actually think the thing that is going to cause it to change is not just like randomly investors deciding that they're going to start buying the stock and then all of a sudden the momentum turns around. But what I actually think is going to change is a specific catalyst, which could be earnings on November 6th. I think they're going to come out and say like, hey, continuing good revenue growth, this director is buying the stock up. It'd be weird for him to be buying the stock up if they knew revenue growth was going to be bad. So he's buying up the stock before earnings. I think they're going to announce good revenue growth. I think that revenue growth is going to cause the stock to pop, and then I want to own the stock for that. And then it could be a much longer term play, obviously. Even if earnings do go well on November 6th and the stock pops up some, it still might be trading at a lower EV sales multiple than you would expect it to. It might be trading at less than its peers, in which case you would then say, well, I'm just going to keep owning it because I still think it's undervalued and they have positive momentum. You don't need to just sell. If the story is still intact, you don't need to sell regardless of what, maybe price action is telling you or what the momentum is telling you. So you can go to CEOWatcher.com to find all the top insider trades for yourself. And don't forget to like and subscribe, and we'll see you next time.